Hello and welcome to Crypto Weeklies. In this video, we talk about Algorand and its token Algo, conduct machine learning based price forecast, regression analysis, and estimated bull run target. None of the content is financial advice. Over the last 24 hours, Algo is the crypto of the day, rallied by about 15.5%. Over the last 7 days, number 2 spot at around 25%. We can check out the Algo tokenomics on CoinMarketCap. One key thing to note is the rank for Algo in terms of market cap is improving, currently ranked number 40. And you can see the tokenomics about 8.3 billion tokens in circulation, market cap under 4 billion, total supply at around 10 billion. So in terms of total supply, almost 83% is in circulation. If you look at the historical time shot or historical snapshot, same time last year, again you can check over here on January 14th 2024, again 1 year ago, the market cap based rank was 51. Now it's under top 40 at rank number 40th. So market cap based rank is improving, and if the market cap based rank is improving in a bull market for a crypto which was around for more than one bull run, again it was launched in 2019, the first major bull run occurred in 2021. So this is the second time Algo is attending the bull run. This is the current bull run. This is cryptoweeklies.com's home page. The chart that we showed, again all of the content is available for free, you don't have to pay or sign up for anything. The chart that we showed at the beginning of the video, crypto of the day chart and the heat map is available under this indicator. Now we'll go to the peak valley analyzer of the overall crypto market, then we'll look at Algorand in detail. The peak valley analyzer helps us understand how much the bull market is complete. Per this analytics, as of 12th of December, again the bull market was only 45% complete with respect to the last bull run. And right now it's at around 46% complete. This takes into consideration 5 parameters for top 100 cryptos by market cap: the volatility, alpha, beta, risk adjusted return, and percent drawdown, to come up with a risk score between 0 and 1. Again, you can understand between 0% bull market completion to 100% bull market completion. In the depths of the bear market, that is in December 2022, the bull market was less than 1% complete. Again, that was a reset, and then since then again we have been starting making videos related to Algorand and other cryptos since I think January 2023, early first couple of weeks of January of 2023. Then that's when we launched the channel. Since then the risk levels again have gone up from 7% to 45%. In the peak of the bull run, that can be identified whenever the risk score goes above 60%. In December we saw just a trailer of what was to come in early of December. When the risk levels went above 60%, the color changed from yellow to orange. Again, these colors are in increment of 20%. The lowest risk is less than 20% risk at blue in color. The low risk is between 20 to 40% risk. The last time we were here was in November 2024. The moderate risk is between 40 and 60% risk in yellow color. Now we are in that regimen. The high risk territory we briefly visited in 2024 for 3 to 4 days. We spent a lot of time in that environment in 2021. So let's see if 2025 is similar to 2021 per the 4-year cycle. And the highest risk territory, anything above 80% risk, again that's usually a great idea to get out of the market. The last print on for this territory between 80% and 100% risk was in November 2021, again almost 3.5 years ago. So let's look at this analytics and try to come up with a theory for Algorand. Again, before we do much of the machine learning based price forecast, we'll briefly look at the technicals for Algo. This chart is the weekly price action for Algo available on TradingView. Price at around 43 cents. Key level to watch is if there is a correction to the 33 cent level. The bull market band of 20-week and 21-week SMA is coming, EMA is coming in at between 24 cents and 28 cents. So if the secondary level of the bull run is achieved, that at that point in time this orange line is coming in at around 76 cents. That is the next level to watch to the upside, and then the next level to watch is $1.45 per the technical analysis. We spent a lot of time in the bear market of 2022 at the 33 cents level. So that level has been reached. this time around in 2025, early 2025 and late 2024. The secondary level that we spent, Algo spent a lot of time in summer of 2021 and in early part of the bear market of 2022 is the 75 cents level. That is the level to be seen, and the last level where Algo spent sometime in early 2021 and in the top of October-November time period of 2021 and early part of the bear market is at around $1.45. So those are the key levels to watch. In terms of the machine learning based price forecast, again, lot of indicators available on cryptoweeklies.com for Algo. Algo is not in the top 20 cryptos. Again, these are the top 20 cryptos. More details available for those crypto. Algo coming at around 40th spot. The machine learning based price forecast for Algo using our in-house developed machine learning algorithm. Again, we don't use any prompt engineering to develop these algorithms. We use historical data, price analysis, and machine learning techniques such as ARIMA, LSTM, and XGBoost to develop our own algorithms to identify where the market is, basing that fair value using this pink line as a forecast. The yellow line is the one standard deviation bull case. The green line is one standard deviation bear case obtained from the machine learning algorithm as the output. In a non-euphoria bull case, the price of Algo per hour machine learning model could be between 43 cents and about $1.51. And there is a confluence between that $1.51 and the technical level at this red line at coming in at around $1.45. That's where Algo spent a lot of time in the last bull run. Those are the next 6 months forecasted in a non-euphoria case. That is, there is if the top is not in the next 6 months. If the top is in the next 6 months, the 95 percentile or the 2 standard deviation bull case for Algo is looking at this point in time between 49 cents all the way to about $11. Again, that's the 2 standard deviation. By that I mean that if there is a blow off top, that could be somewhere between 49 cents and $11. And as we move away from the forecast, that is, as we grow further apart in time, the likelihood that the 2 standard deviation bull case occurs is less likely. So by that I mean, again, the 2 standard deviation bull case looks like this from the last cycle towards the end of the halving year of 2020 till about the first or second month of 2021, lasts about 2 months. So again, a 6 months euphoria phase is hard to achieve. Again, we can only realistically forecast only 2 months into the future. Again, the euphoria, even from here, from August lows till about September, lasted for about 1.5 months. So from our perspective, to keep everything fair and rational, for the now that we are in the middle of January of 2025, the extent to which this bull market makes any sense, this bull case or the 95 percentile 2 standard deviation euphoria bull case makes any sense is only 2.5 months. Let's take it till the end of March of 2025. Again, that scenario is between 49 cents and about $2.20. So that's the next 3 months we'll target. Again, we'll always update the forecast as and when we get more data, and all of the forecasts are current. Again, we have used data till about January 12th of 2025 for making these bull case scenarios. If there is a pullback, again, the 1 standard deviation floor or the bear case for Algo is between 19 cents and about 33 cents. So those 2 levels, again, quite confluent with the first, that is the 33 cents where the token spent a lot of time, and also the 19 cents again, which is the green line over here. So there is a lot of confluence between the machine learning forecast and the technical analysis for Algo. Looking at the regression based analysis, again, to utilize the historical data to find what is the fair value of Algo. This is the polynomial regression function in the pink line. In the bear market, this polynomial regression function has a downward bias, or and in the bull market it has an upward bias, to identify what is a great time to buy, that is below this pink line in the bear market and in the bull market, where the shape of the function is accommodated based on the phase of the market. Again, anything below this pink line, historically speaking, is a great time to buy. Anything above again per your own analysis. It's a great time to sell. Right now the fair value for Algo per the polynomial regression analysis coming in at around 61 cents. Again, ideally DCAing below one standard deviation residual applied to the fair value helps out to not DCA when the market is falling, but also identifies the bottom better than the fair value. Again, similarly in the bull market, a one standard deviation residual applied to the upside helps identify what is a scenario where again we can say that the bull market has commenced, and this is the non-euphoria phase of the market, and the euphoria phase is whenever this yellow line is breached. Right now that yellow line threshold is at around 98 cents, and you can see in the last bull run again the price not only went to the one standard deviation bull case but the two standard deviation residual applied to the fair value. That level is coming at around $1.56. Again, those levels are quite confluent with the red line over here. Give and take about 5 to 10 cents difference, but again those are the key levels to watch per the regression model as well. Looking at Algo in terms of the three risk based model: the simple moving average based risk, the regression based risk, and the time weighted average price based risk. Let's look at the simple moving average based risk. Right now the price is okay. Just let me zoom in a little bit. These are the risk levels per the 20-week moving average. Whenever the risks are high, that means that it's a good time to get out of the market. Right now the risk level is at around 42%. That means 58% upside, 42% downside. In terms of the second model, which is the DCA model, which takes into consideration the regression based approach for Algo, again the same polynomial regression model that we saw at a weekly level is applied to the daily price action, and per the relationship between the price and the regression level, the risk levels are determined. Again, great time to DCA per the model whenever the risks are less than 10%. Right now the risk is at around 8% per the regression model, and if you were to tune out the noise and say that I will only DCA, again that is again at your own discretion. Personally speaking, only DCA when the risk levels are less than 10% for Algo. Again, helps us tune out the noise wherever the market is too much heated, and DCAing only at the appropriate levels. Right now the risk level at 8% again provides a target for Algo between let's say a moderate risk target between 88 cents and $1.21, and higher end of the target between $1.28 and $1.54. Again, this model also confluent with the red line that we just saw in terms of the technical levels. Now last but not the least is the time weighted average price, and then we'll conclude with the estimated bull run case. Per this model, again this is the time weighted average price, helps us identify how much time Algo has spent at some of the key price levels and what is the average in terms of the time. Coming in at around 48 cents, price slightly below that. Whenever the price is below the blue line, that per this model is essentially close to zero risk, because the hypothesis is in the bull run, if the underlying crypto is going to participate in the bull run, if the DCAing below the time weighted average price eventually works out, even though if it's not ultimately finding out the exact bottom but provides a range for DCA. In my books the model has served some purpose. Right now price is below the time weighted average price. Now looking at the estimated bull run case as a composite of the three models that we saw, which are not the machine learning related model but the regression model, the SMA model, and the time weighted average price model, the weighted risk for Algo is coming in at 10%, and the estimated bull run peak is at around $4.07, representing a reward of about 9.3x from the current price of about 43 cents. And with that, I would like to conclude the video. Hope you enjoyed the content. If you do, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.